Hey guys, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with a closed swing trade recap from the week. I have a few trades I want to talk about. Very interesting week, very intense in the markets with the big sell-off early on, followed by a nice recovery toward the end of the week. So, not really sure what to make of it. Let's take a look at what's going on here with the S&P. Now, if you guys have any questions about any swing trades that I talk about or any thing trading related, more than happy to talk to you. Give me an email, shoot me an email at jeff@warriortrading.com, or you can get my Skype contact information down below and give me a call if that's your thing too. So after the market opened up here on Monday with this big downward move, we got a pretty quick bottom rejection here put in, and rejection of the lows put in, and a nice recovery over the next few days, and we pop back up just under that $200 mark, where now we're forming somewhat of a resistance, which also is going to coincide with the previous lows. Now, I always tell my swing students that previous support will become resistance and previous resistance will become support. If we look back here in February of this year, you'll see that the SPY put in a triple bottom right off of this $200, $199, $200 area. Put in a triple bottom before moving on to making new highs. Now that we broke below that area, it's acting as resistance. So previous support is becoming resistance over here. This is pretty common. Almost any stock you look at on a daily time frame, you're going to see something similar where there's previous support level for the price action, and then down the road at some point when it broke that support level, it acted as a resistance level. It's just the way things work, guys, and the S&P is no exception here. So if we can get over the $200 mark, we'll be okay. But early next week is going to be a big indicator of how strong our market really is right now. That doesn't mean that there weren't good opportunities for some trades, though, during this time frame. The biggest trade from this week was a 33% winner on a stock called EFOI, Energy Focus Incorporated. Okay, this stock hit my scanner on the 25th, which is right here. Put this little arrow in here. Okay, so this little green arrow, let me zoom out here. Little green arrows, when the stock hit the scanner, it was a 4% move up. Even though it closes the doji, the relative volume was intense. And one of the greatest confirmations that we can get in that a breakout is imminent is increasing relative volume. So we know that the buyers are coming in, they're in control, and as we break through certain resistance areas with that high relative volume, we're going to see pretty sharp moves to the upside, and this was no exception. So we got long on this trade right here at 1702. As we started taking out the high of the previous day, which was the day of the alert, we got long the next day. That day we saw a high of about 1888. In just a few hours we popped up to the highs there, so we instantly had about a 1.5 on the trade. The next day we caught a small gap, and once again today on Friday we tested that area again, which is 2250. So we alerted this trade at 1702 on August 26th. From there it shot up about 5.5 points without ever testing our entry price. So if you were in this from the bottom to the top, you could have realized about 33% or 5.5 points on this trade, which I don't have to tell you that's an enormous winner, especially in these volatile market conditions. But what we have here is a classic bull flag breakout. Once we started testing the top of the flag, which is back in here, we got a sharp move up above it, and now we're holding the top of the flag. So we have a flag up, consolidation period, a flag up, consolidation period, and then now another flag up. So we're going to look at this area as support. The high of this flag area, between $18 and $19 here, should be acting as support as the FOI continues to make moves higher. It is testing all-time highs, or excuse me, at least the 52-week highs. And so I'm not sure if it's going to have enough room to push through. But either way, we made our money on this trade. And if you're still in this trade from that alert that I sent out, you are definitely green on it, and you have a nice cushion. So that's EFOI. Now, one of the trades that didn't go my way this week was a short on DMRC. I was looking to capitalize on potential market weakness here, and what I saw was this. Oops. Right here at 33 bucks or so. Okay, what I saw here was this big move up here. This is like a 10-point move back in early June from DMRC. And then it's this kind of long flag consolidation thing. But overall, it's starting to trend down. And as you see, the 20 and the 50 moving averages were just crossed recently here. And we got the alert on this stock for a potential short on August 25th. So let me put that up right here. So the alert came on this day with this high relative volume spike to the selling volume was high. We had the stock starting to roll over. It closed below its 20 and 50 moving averages, and it's testing this $33 area, which happens to be the breakout spot from the previous flag. Now, if you recall what I said, previous support becomes resistance, previous resistance will become support. So this previous support area was resistance for short sellers. We're looking to short this for a move down to this next area here, roughly at about $31.50. We did get a break below 33. This happened to coincide with the day that the market recovered after the big sell-off, and so we got a spike up, and we ended up stopping out of this trade the next day. And good thing we did too, because as of Friday, this thing put in like a 4-point move, and it would have crushed us. So we got out, followed the rules of the trade. We got out when we broke a new candle high, and we're no longer in this. But the idea was capitalize on the weakness of the stock in a weak market, but unfortunately the market rebounded and so did the stock. Not a big deal, it's going to happen, but we stick to our rules, and in doing so we're able to manage our risk effectively. Okay, another winner from this week was on LHO, LaSalle Hotel and Properties. This is a real estate investment trust. This thing popped up on the scanner here on August 26th. So let me show you where that's at. August 26th is right here. We got long on the trade on the 27th. And what we have here is the big 4% move to the upside on increasing relative volume. And what we had was an inability to hold the increase in volume as the volume in the market started tapering off. This thing kind of fizzled out. However, it did so, 60-70 cents above our entry. So again, another few percent on this trade. We got long on this trade at 31.63, which is right here. It hit a high of this move of about 32.47 was the high of that move. When we got long, and you can see what happened here is we hit resistance at the 20 EMA. It tapped this purple line before pulling back to the $32 area. Today it's still weak. It's not weak enough to sell off, but it closed as a doji again just under this 20 EMA, so I expect that to act the 20 EMA to act as a resistance level, which also happens to coincide with the half dollar. Remember, half dollars and whole dollars are going to act as psychological, mental, and mental support and resistance areas, because retail traders like round numbers and they're comfortable using whole dollars and half dollars for their stops and their entry spots. So market makers, algo traders, they all know this, and so these are where we're going to see a lot of congestion, the half dollar and the whole dollar. My ultimate target for this was a move up to the $33 area from our 31.60 entry, but we fizzled out before we could get there. But I think if this thing can hold 32, it's going to hit 33 no problem, and that's the high of this whole range here going back to the middle of the month. And so that's what I was looking at on LHO. And finally, a trade that we initiated today was on APO, Apollo Global Management. See, this was alerted to me yesterday, and we got long today, and as you can see, we have this high relative volume spike. And today, Fridays are traditionally low relative volume days for the market. A lot of traders from the exchanges take the day off, make it a 3-day weekend, and especially after a week like this, people probably taking vacations and drinking themselves stupid with all the stress that they endured from earlier in the week. But at any rate, we did get a much lower relative volume move today, but we still had a move to the upside. So long entry on this trade was over 19 bucks, which was the previous high of this little range here. So we got long at 1903, and we're still in this trade. Today we only hit a high of about 1918 or so, but we're looking for a move to at least to at least 1970 here, the low of this previous below the previous consolidation period, and eventually we're looking for a move over 20 to maybe $21. So we have a tight stop on this using low of day as our stop, which is going to be 1872. It's a penny below the low of day from today. So we have candle over candle confirmation of the trend here. That's one of the confirmation indicators we look for. We have candle over candle trend confirmation, and now we're just looking for the volume to come back in on Monday when everybody resumes trading. They see that this thing closed higher on a weekday and that it's poised with little resistance to move back to $20, $21, and I think that's what we can see. So long on this trade right now. With a 1903 entry, it closed just over our entry, so it held up through the end of the day move, and that's exactly what we want to see. That's the only open position that I have going into next week. I don't want to get too heavy on a weekend following the biggest dip in the market in recent history because of the things that can happen over the weekend. It's part of good risk management. So I'll look to hit it hard next week once we figure out what happens over the weekend, and let's see where the markets open up on Monday. That concludes the closed swing trade recap for this week. If you guys have any questions, again, please email me or contact me. My information is below. And we hope to see you in chat. Have a good weekend, everybody. Take care.